What's going on, guys? Welcome back to the Crypto Novice, your number one source for everything in the world of cryptocurrency news, meme coins, and altcoins and things of that nature. So we're on Cointelegraph today, and before we get into the video, as always, I want to say I'm not a financial advisor. This is not financial advice. Do your own due diligence and research before you invest in any cryptocurrency. Remember, these videos are for educational purposes only. Help us educate people in a positive manner if there's more that you know that we don't. If you're new to the channel, hit that subscribe button down below and turn on that bell for all notifications. Why is the crypto market down today? Well, the crypto market continues to fall as traders take a moment to figure out what is next for Bitcoin and altcoins. Which is interesting because the crypto market being down, it has a total market capitalization falling by 0.63% to reach 1.67 billion on January the 18th. Now, this movement has eased in Bitcoin down to $42,133, which is a market dominance by 0.25% to 48.85% as the excitement surrounding spot exchange traded funds cools off. As you can see, BTC, ethereum, BNB, Solana, XRP, ADA, a bunch of them seem to be taking a downward trend. Now, this might be a time to invest a few bucks and see where it can go. Invest low, sell high, right? That's usually how markets work, which is interesting. But again, BTC has traded sideways above $42,000 throughout the week. Traders are looking to accumulate below 40 grand, but experts predict the days of short-term impact of the Bitcoin ETF approvals are largely over as the market stalls. So there are some reasons why a strong US dollar will trigger selling points and pressure in crypto. Okay, so trading volumes across the crypto market have taken a hit due to a number of factors, including volatility, earnings season, and macroeconomic developments. So a strengthening US dollar is exerting selling pressure on Bitcoin right now, as you can see on this chart below. So with the dollar going up to 103.50 on January 18th, that's deflecting the pressures of the 90-day exponential moving range, or 100-day moving range. Now, the robust strength has been fueled by increasing demand and a rise in U.S. Treasury yields, as U.S. retail sales rose higher than expected in the last month of 2023. Data from the U.S. Census Bureau shows that December 2023 retail sales outperformed consensus, registering 0.6% growth versus the 0.4% forecast and 0.3% from the previous period. Now, it also had a significant rise in the U.S. Treasury yields, which shows that markets are adjusting their bets on the Federal Reserve rate cutting roadmap, which is definitely something to think about, right? Because as the strengthening U.S. economy keeps developing, it is supported by the latest data, making changes to the market's dovish bets at this time, albeit odds for rate cuts in March and May that hover around 50 basis points. Now, in December, consumer price index inflation ran a chart that said the rate of job creation and wages picked up while economic activity remained strong. So as you can see, the dollar is becoming more and more valuable, and all these NWO globalists are saying, no, it's not. We're going to lose the dollar. We're going to crash the dollar. Whatever. Now, this adds to the strength of the dollar and in turn exerting pressure on crypto prices. So when you've got liquidations driving the crypto market, that's what's going to happen. It's going to decline. Prices are going to go down. Cryptocurrency is going to lead to crash of liquidations across the derivatives market. Now, bullish traders appear to have been caught off guard, leading to a quick spark of long liquidations. So nearly $137 million in long positions have been liquidated across the crypto market, worth $89 billion, and wiped out in the previous 12 hours. That's pretty insane. So with over 61,874 traders were liquidated, with the largest single liquidation being a BTC and Tether of a USDT of $1 on Binance, valued at $7.31 million. So the spot Bitcoin ETFs were approved on January 10th, with trading debuting on January 12th, with the first trading session being somewhat confusing as investors were not aware or sure of the actual trading volumes, what they were going to be. Market makers themselves also faced issues with the different liquidation timelines for each instrument. Nevertheless, the $4.66 billion volume that spot BTC ETFs witnessed on the first day set a record high in the traditional finance industry, and the Grayscale Bitcoin Trust transferred 8,730 BTC worth over $376 million to Coinbase Prime deposit addresses on January 16th. The traders imply that GBTC holders are choosing to close out portions of their positions, and that makes sense because when you've got such a crazy volatility going on right now, the spot BTFs are going to launch, investor sentiments are going to have more volatility surrounding the long-awaited approval, which has dropped, leading to a market consolidation. Now, what's going to go crazy to me is that retail traders and the current ETF inflows are just not being perceived as spectacular. And the general consensus is that the markets need some time to cool off and consolidate, which I agree with. Now, on the X social network, independent market analyst Michael Vandepop suggested that investors not be bearish on Bitcoin or have a negative outlook, but the dip may hold. Who knows? So that's what's going on in the world of cryptocurrency right now. It is down. Buy low, sell high. If you're going to invest, might be time to throw in a few bucks and see what happens. All right, that's going to do it for today's video. Like, comment, subscribe, share. We'll talk to you in the next video.